Investors are hoping for bold action by European finance ministers as they meet in Poland to discuss the debt crisis. U.S. Treasury Secretary Tim Geithner is also there to discuss a possible U.S. contribution to the bailout fund. The U.S. Federal Reserve teamed up with 4 other central banks on Thursday to loan extra dollars to struggling European commercial banks. Now, that news has led to optimism among investors worldwide. Stock markets in the UK, France, Spain and Italy jumped over 1%, while Germany's DAX was up 1.8%. Asian markets also gained on Friday. Well, let's speak some more about this now to Jane Foley. She's a senior foreign exchange analyst, a strategist, joining us live from London. Thank you very much, Jane, for speaking to us. So this move by the world's leading central banks to bolster liquidity in the European banking system, what will it achieve exactly, and is this a long-term solution, really?
Well, it's not a solution to the crisis. It really is just a treatment of one of the symptoms. But this could be a very dangerous symptom. And the symptom that we're talking about is, of course, that of liquidity. Now, what this means is it's related to the amount of funds that are sloshing around the interbank system. And what happens is that when banks begin to fear that one institution or several institutions may be under pressure, perhaps because of a Greek default, then they begin not to lend money to this institution. Now, there have been signs of liquidity issues in the markets certainly over the past week or so, or maybe even more. And what these central banks have done is that they have reassured the markets that there's going to be plenty of liquidity in the market, so all institutions can get hold of the liquidity that they need, and then customers, businesses and corporates at the end of the line will also be able to get hold of their money should they need to do so. So this is all about creating a much more reassuring environment, and it certainly worked insofar as asset markets have been trading on a far more confident note. The euro did see a significant surge against the US dollar yesterday, although it is off those better levels now. And certainly, whilst it isn't a solution to the debt crisis, it is a signal that Europe and other central banks aren't going to let this crisis really do an awful lot of damage.
Now, the meeting in Poland is, of course, being closely watched by investors. What are you hoping, what action are you hoping they'll take to ease this debt crisis in Europe?
Well, of course, irrespective of what the central banks can do, it is the politicians that can or will have the power to eventually come up with solutions for this debt crisis. And optimism has been raised really ahead of these set of meetings, because we do have US Treasury Secretary Geithner attending these meetings. Now, there have been reports over the last day or so that maybe he's going to suggest that they use their bailout fund, the EFSF, which is a European zone's bailout fund, in different ways, and maybe use that or leverage against that to provide or raise extra funds for the countries that need it most. Now, the financial markets would like that. The financial markets certainly want to see more action taken to really ring-fence the countries that are under most pressure, and therefore allow them more time to put in the budgetary reform measures that eventually will help soothe this crisis in the Eurozone.
All right, thank you for your analysis. Rabobank's senior foreign exchange strategist Jane Foley joining us there live from London. Thank you, Jane.